Welcome to the Transparent FX Academy. I'm Nick and I'm a top plotter in TradingView with over 190k reputation points. And in this video, we will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be analyzing the pair from a technical perspective, then we will go and see what we have when it comes to the order flow, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about EURGBP. The reason for which I want to speak about it is because we do have quite interesting price action and structure. So let's get straight into it. Starting here from the monthly, what we can see is that the market at the moment is testing and rejecting a very strong monthly demand and support zone. In fact, from here, the market started all this rejection to the upside. Again, here, tested and rejected. And lately, we can see how just a few months ago, the market was testing this zone, and now we have started rejecting it to the upside. So from a monthly perspective, everything seems pretty bullish, and we could expect more bullish continuation. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, we can see how the market just printed a strong impulse correction, and at the moment, we are creating the continuation to the upside. We can also notice how, since we have an impulse and correction, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse. And if we do that, we can see how the 0.786 Fibonacci retracement has been just tested, and at the moment, the market is starting to reject it to the upside. So in a situation like this, what we could expect is more potential continuation for the completion as well of this impulse correction and impulse pattern to the upside. We can also notice how last week the market had created this candle like this, and when you see a candle with a very long wick and a green body, you usually expect the next candle to fill in the wick. It's a pattern that I have spoken about many times, and in fact, we can see how the market just filled in this wick quite accurately. Dropping down on the daily time frame, what do we see? Now, here from a daily perspective, we can first notice how the market printed this M pattern. Now, after the creation of this M pattern, and with a full breakdown explaining all the reasons for which we expected a rejection to the upside. The market, in fact, created that, but in creating it also printed a W formation, after which I made another breakdown explaining all the reasons for which we expected this rejection to the downside. And then from here, I made another breakdown explaining why we could easily expect a rejection higher. And once again, that is exactly what the market has now given us. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. Now, a very important thing to notice is that now that the market has created this impulse to the upside, we now have a new structure. So we have to adjust to this new structure. The first thing that we must notice is that we are breaking above the previous daily high. Now, if we go and see what is going on from a COT perspective, so commitment of traders, which is what the non-commercials, so the biggest speculators in the market, are doing, and we check the data for the euro, we can see how lately net positions have been growing. We went from a negative net positioning of minus 6.3k net positions with way more shorts than longs to now having 52.2k net positions with way more longs than shorts. So the euro is getting very strong. The pound on the other side is very weak with minus 74k net positions with 104k shorts compared to only 30k longs. So the pound is getting very weak, the euro is getting very strong, meaning that if the market here will complete this impulse and provide to us a correction, at least to the 0.32 of the Fibonacci taken on the daily impulse, at that point, there is definitely the possibility for a rejection higher. So how we could be approaching this potential rejection higher? Well, as I was saying earlier, if the market will complete the impulse and then provide a correction, the way in which we could be approaching it is as usual being reactive and not predictive. because that is how trading is. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for this potential rejection to the upside for the completion of this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can access now completely for free. The link, in fact, is in the description, and I really suggest that you go and check it out. Now, if you enjoyed this video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.